what an awesome week it was in regards with all the commodities we've been predicting from last couple of weeks, and how nicely the price has been pushing up in our direction where we predicted. Here on natural gas, here on gold, nice breakout. Here on silver, nice push up from our trend continuation zone, and other commodities which I'm going to talk about in this video. But starting this video with how I personally took a trade in my real account, and when I was placing the trade, I've recorded that part to show you how I personally take my trades and the amount of risk I personally use when I'm taking my trades. So I'm going to show you that in the first part of the video, and then in the second part we're going to do analysis of natural gas, gold, silver, crude oil, and I'm also going to add US cocoa as well. Also, I'll be uploading a video today, or might be uploaded by tomorrow, where I'm going to teach you how you can become profitable trader just following a nice method for next 2 to 3 months. I'm going to give you a challenge. If you follow that, I promise you, you will see insane amount of results. That is what I'm saving for the next video. That's why I'm not going to make this video much longer. It might be longer, but not as usual. So keep an eye on my tomorrow's video where you will see and learn how we can take trading to the next level. So stay tuned for that as well. Now, in trading, risk management is really important. So before I continue, I would like you guys to take a moment and write down a comment how you learned from this channel. And if you are my student in MMTA or my priority member, I would really appreciate your comments and a feedback so that the other traders can benefit from that. And I'll be posting that on my socials as well. So I'll really appreciate if you do that by taking out a very little moment out of your precious time, pulling up the spreadsheet of the trades we took so far this year in the priority group. Now, this is just 1-to-1 risk to reward ratio. If you have managed your trades, then the results will be awesome as well. But you might see less winning trades, but the amount of pips might be more. So it will be more or less better ROI. Now, so far this year, I'm going to show you something that how trading can sometimes mess up with your head as well. That is what I'm going to start with. A trade I personally took. First, how I've entered this trade in my live account so that you understand I'm following the exact same rules which I'm trying to teach you if you are a beginner. Now, right here, as you can see, I'm placing a trade on AUD USD in my IC Markets live account. And if you see here, I'm only taking 1.5% of risk. I was placing 2% initially. Then I remember that I'm already in this trade, which is USD CHF. And because I'm selling dollar here on AUD USD, I've also sold dollar here against CHF. So if I'm going in the same direction, I sometimes split my risk. So I was already in this trade in USD CHF with a 2%, but here I just want to keep it less than 2%. Ideally, I would say 1% because the maximum I go is 2% per trade. But that is what I'm going to teach you in my next video, how I use my risk to accumulate my profits. Now, exactly 1% of risk I'm placing, 1.5% of risk I'm placing here, if you see here on my real account. And by the way, this is an account connected with TradingView, which is C Trader, and I have an account with IC Market where I'm using MT4. That's why I've split my equity in both platforms. So I sometimes take my trade, a percentage of trade here, and then a percentage of a trade on my MT4 account as well. And I do trade on the other platforms like Owanda, where I trade different instruments. Now, if you see here, I placed this trade with a limit order. Now, a lesson to learn. I did not enter a trade with the market order because I wanted to go exactly at my entry point. Because of the spread, it did open a few pips below, but as you can see, I've placed this trade exactly right here in my live account. As you can see here, IC Market is connected and the trade was placed right in front of you. 38 pips. I would have made 80%, which I've adjusted afterwards, which I'm going to show you in a very short while. So now coming back to this trade, which I personally took right here on IC Markets, right here, managed it till 44 pips. As you can see, it nicely hit the take profit. The trade was placed in front of you exactly, and then it hit my take profit. So that is how you should be trading. Be sure that you are under your risk capital, and once you take your trade, please don't exit it earlier, because there were times when price was here, then it pulled back down, came back up, was pulling down, and then eventually hit my take profit. And that is a time when it tests your patience and you don't want to exit early because you're seeing yourself really near to your take profit. I know there's a time when the price pushes back down when it's about to hit your take profit, but that is not going to happen every single time. So here, a good example of taking this trade with a low risk because I was already in a trade. I want to show you this was a trade alert I've sent to my members, and as you can see, it did pull down to your limit order because the price was a little bit up, but if you have entered with the limit order at the entry point, that nicely hit your take profit. And coming back to my spreadsheet, which is right here, that was logged in my spreadsheet, and something I want to show you. If you see here, a winning streak right here, only 1 and 2 losing trades since the middle of the March. But not to forget this part as well, the inconsistency of your trades. Now imagine a losing trade, a winning trade, losing trade, 2 winning trade, losing trade, winning trade, 2 losing trades, winning trade, and then go on 3 losing trades, and that can mess up with your head. And what is going to happen? You get frustrated. But for me, I was stay consistent, I was patient, and I knew that if I'm using exactly what I'm using for my risk, then who knows, the next opportunity can recover all the losses here. And as you can see, the results are in front of you. I keep on showing you these results and the trades on every single weekend's video. Feel free to check my weekend's video where I've shown all this trade when I sent to the members as well. And this was a winning streak right here, 1 loser, winning streak, 1 loser, and then a winning streak right here as well. Now that is not going to happen every single time. Now we might have a losing streak here, who knows, but the goal is to keep yourself under your risk. That is what I'm going to talk about in my next video. Now, coming back to how we managed to enter a counter trade and then a pullback trade as well, which is a good example of. First, as you can see, I took this trade live, sell, and then buy both. Now, coming back to where I sent this to the members, which is right here. Now, I've seen lots of ads on a Facebook and a YouTube that someone tried to show you that they have made thousands of dollars in a one trade. And imagine they're placing 100 lots and 200 lots in just one trade. But yes, that person might can afford this much amount of lots. If someone has a low equity, let's say if someone is holding 5K or 10K, that's realistic. Because in that scenario, if you're placing 1%, 2% of risk, you are making at least 70, 80 or 100 pounds in a one single trade. So that is what I want to teach you. Stay under your risk. Now, right here, this was a double top entry pattern from the counter trading zone here on AUD USD right here. Now, we followed all the rules. We have not entered in the market randomly. Now, I'm going to show you because this was a zone sent to my members. Right here, 29th of April. The zones report was sent to the members, and if you scroll down, right here, AUD USD, a zone from where we were waiting for the price to hit and give us a reason to enter our trade. Now, what was the reason? After a pullback to my zone, it forms a nice double top pattern, but I used this as a second top. Yes, it then pushed up. That might be a moment of panic if you're a beginner, but I was in a trade. Once I was in a trade, I don't cut my trades early until I hit my stop loss or take profit. Now, a counter trade, actually a trend continuation when the zone was broken, pullback and a reaction, then it might push up and continue to push up in a trend. But the goal is to grab a good amount of profit, and as you can see from these zones, I expect at least good 1.4 to 1 risk to reward ratio, and as you can see, it easily hit 1.4 to 1 risk to reward ratio. But for the beginners, I always recommend use 1 to 1, gain your confidence, and then start managing your trade. And I do teach strategies in my course where we have a strategy. If you are a student, you know the Fibonacci pullback strategy where you have a good risk to reward ratio. But again, you can manage your trades in every single strategy which you are learning here on YouTube or in my course as well. Now, a trade alert was sent to the members. Right here, as you can see, we had a condition at the zone and where we entered our trade. Now, all the rules are met. The mistake the traders do, they don't cut their trades. Trust me. And then when they see this pullback and they see the loss, and they start doing revenge trading. As long as once your targets are hit, then come out, pull the profit, move ahead to the next trade. Now the goal is to get a better risk to reward ratio, which we had here. 1.4 to 1 was a target that has been hit easily. And then what do we have? Price hit my 50 EMA. If you follow me on YouTube, you know how we use 50 EMA. It is not an alien for you if you follow me from a couple of years. We had some good entries on natural gas. I know most of you like to follow natural gas, but here exact same strategies which we are using on natural gas I personally use on Forex and all the other markets as well. Now a pullback strategy, which is right here, a green candle, a bullish candle, happens above 50 EMA nicely in a trending market. Price hit my counter trade zone and then it nicely pushed down, hit my take profit, exit your trade, had another entry right here that hit your take profit as well. So both entries played out nicely. If you look here, right here in front of you, how disciplined we were in taking our entries. We entered in time for a sell trade, we exit in time, then we entered in a time for a buy trade, and then we exit in time because we were heading towards a level of resistance. Yes, if you want to manage it, again I say for beginners, I don't recommend that. If you want to manage it, you can do that. Push your stop loss to break even and let it run risk free. That's totally up to you. And then we have USD CHF. Now, like I already mentioned in the start of the video, that we were selling dollar and I was selling dollar here as well. So on both places I split my risk, which I've already shown you in the video. And as you can see how nicely the price hit the take profit in a trending market when it broke below 50 EMA, had a cross, and then we had a pullback. Now that would be entry as well, and let's see if that would have hit your stop loss. Yes, that would have hit your stop loss, but if you have used the bigger target from the strategy room, then that wouldn't have hit your stop loss. That is why I have both targets. You need to optimize which one performs well. But here we used a smaller target and we entered right here, and that would be entry as well. If you remember how we enter a pullback entry number 2 after this trade, you know how we take another trade right here with exact rules. Now the hit your take profit as well, and nicely sold dollar on both AUD USD, USD CHF, hitting our take profit easily. And this was a trade logged right here, USD CHF, nicely hitting our take profit. So that is how so far we are up this year 75% so far, and just with 2% of risk. If you're someone comfortable with 3%, as you can see, that would be 11k since today's date. Just in 5 months you made 11k if you're someone comfortable with 3% of risk, but I personally use 2%. It's totally up to you how you want to manage your risk, and that is just 1-to-1. By the way, the time might differs from the trade alert I've sent to the members because I've entered the time when the candles were closed, because sometimes I entered late and sometimes I enter at a better price. So that is why, if you're wondering why the times are a bit different, that is why it is. Now the natural gas, 1, 2, 3, 4, 5, 6 trades so far, and none of them hit a stop loss so far. Sometimes it's not according to my schedule. I couldn't take a trade. That's why I don't send it. That's why it's very important for you to learn these entries. For example, I could not take this trade, a pullback trade here on Owanda, and because I was busy. I could not take this trade that happens just 2 days ago because I was busy. But if you are someone who follows me, and I got lots of messages from traders that they have managed to enter and identify this trade, and that made me happy that you guys are learning, not just following someone blindly. And that is why I did not enter that in my logbook, but you guys are learning that, which is awesome. So you see how nicely you can make money in the market. But let me hit you with a reality. A losing trade here that happened, which was also logged right here, GBPAUD. I want to show you that as well. That follows all my rules. But if you would have used a bigger target, that might have hit your take profit. Who knows? I've not checked that as well. But with a smaller target, that is a losing trade, and that is what we call a reality of a business, any business. Because in business, you can't have just profits. If there is no losses, then it's not a business, it's just a gambling. One more trade I want to show you, because this was a trade that is 124 pips trade. Now, I took this trade along with my USD Japanese yen trade, which was sent to the members. 196 pips we took here, and I don't want you guys to risk a lot of money by taking another trade. That's why I did not send this as a signal, and I took it myself. Now, that is a goal that you guys need to learn from these alerts. Now, it is not something which is alien for you. You were already prepared for an entry right here, and we had an entry. And what do we have? As you can see, on 29th of April, I've sent this report that if the price pulls back to my area of trend continuation bullish zone, in that case, I'm going to look for my entries on smaller time frame, and the least I go is 1 hour time frame. And what do we have after that? We had a nice double bottom pattern, right? A nice condition and easily hitting 124 pips take profit. I want to show you that I took this trade in real as well in my personal account, which is right here. As you can see, nicely hit 123 pips here on my platform. I adjusted according to my own platform. So that is how you take your trades, with rules, with conditions, without any guessing. And if you're under your risk capital, if you're managing your risk nicely and properly, then every single week you will grow your equity, and eventually you will start to make money, and eventually you can become a full-time trader as well. And that is absolutely possible because I show you these examples every week so that it will motivate you to stay disciplined and be patient. And before I end this first part, I want to give you a little suggestion. Please do not overtrade, because once you see these type of big wins, you start to increase your risk. It gives you euphoria. It gives you the thrill that now you can conquer this trading world, and now you can just leave your job next day. This is not something I want you guys to do. It should be really normal for you in trading. These wins are just a part of a day, a part of a profit. Who knows, there could be a loss as well. So treat your profits exactly how you treat your losses. Don't get excited. If you have a loss, stay calm, look for the next trade. If you have a profit, stay calm, look for the next trade when there is conditions. Lastly, I want to show you silver, one commodity that we were waiting for the price to pull back to the area of value, and it eventually did pull back to the area of value. Not only it pulled back, it also forms of a bullish engulfing pattern. One of the signal you guys learn, one of the aggressive entry you guys learn, and in that scenario, how nicely the price pushed up, blasted up, hitting your 1.4 to 1 take profit, if not 1 ATR. So that is how we take our trade, and there are few other commodities which we still waiting for the price to get to the zones for the next possible entries, which I'm going to update to my members by tomorrow. So that's it for the first part of the video. I hope you enjoyed it and hope you have learned something out of that and implement that in your trading. Remember, patience, discipline, consistency is a key. Don't lose hope if you have a losing trade, and don't get excited if you have a winning trade. On that note, let's start our analysis with natural gas, and then we're going to go through gold, silver, crude oil, and US cocoa as well. Now, what do we have right here? Starting with capital.com, nicely pushing up. First, if you are trading on Ovanda, your 1.61 target has been hit, and as mentioned that we can expect a good pullback from 1.618 retracement. That is exactly what is happening right here. And let me show you what I've said on that day. Here on Ovanda, we are about to hit 1.618 retracement from where we can get a possible pullback. Awesome. So pullback was expected because 1.618 is a strong resistance as well according to the Fibonacci levels. Now, this is the pullback I was expecting, and which is really awesome. Another process of a buy signal. Now, if you see price pull up, pull back, broke above this high, push up, pull back, broke above this high. We have another pullback, and then it is a very likely chance that it will break above and hit the next level of minor resistance and keep on pushing up, but expect some breather from here. Now, the way the price action works, removing all the indicators right here from where the high started, and then price start to make the move. We had a pullback, and we had a break above, and we had a break of a new high. Now, that could be a break as well, but we did not see any pullback. Now, after that, what do we have? Another pullback, and then another break above this high. So if you look here, the anchor levels, again, I'm going to talk about in my next video, which is going to be hopefully tomorrow. Now, as you can see, once the price broke above another anchor level, pull back without breaking and closing below these lows, it pushed back up, and it gave us a signal like a bullish morning star pattern. After that, getting another pullback. Now, this can be a pullback to this anchor level right here. Let me readjust that. Something like this. It can be pullback to this level, which is right here, as you can see the numbers in blue, and then it can likely forms a bullish engulfing signal. Now, that is also above 50 EMA, which is an extra conference, which is really good, and in a process of an uptrend after this pullback. If you have a bullish engulfer above 50 EMA, that will be a strong entry signal, and we're going to go for another long trade. And we keep on taking longs. Now, if you're someone who's managing it, this is the place you want to exit your trades. If you have seen my previous videos, this is an area from where you want to exit your trades. Now, at this point, if let's say the price forms a bullish engulfer, that can be a very next candle. But we need to make sure the price won't open gap up or gap down. If open gap down, look for a bullish engulfer above 50 EMA. If gap up, wait for the price to pull back, forms a bullish engulfer above 50 EMA. So only looking for buy trades, and we have a very good chance and a likely chance that price will hit a next minor level, not a major level, but a good level from where we can expect good breather, which is 2.498. That goes up to 2.595. It's also going to hit over 1.618 retracement, from where we can expect bearish engulfers or double top entry condition for our next sell trade. And remember, that won't be reversal, but something that's a bearish engulfer. Enter, use 1.421 or 121 or 180 is totally up to you then. Or if you have a bearish engulfer, if you're a less aggressive trader, then wait for the price to form double top. In that case, you'll have a less aggressive entry, and we're going to use stop loss above, take profit accordingly. So that's what I'll be expecting when the price hit the zone. And once the price hit this area, that should be enough to hit your profits. We shouldn't be greedy just by hanging on with the trade. A good example I've just recently shown you in the first part of the video, how nicely we grabbed 1.421 profits here, and then price forms another bullish signal and then pushed back up, because in a continuation, price gives a breather and then it likely or possibly break above the highs and start to make its trend towards the upside. So that is what you guys can expect here as well. If we see conditions of reversals, I'll keep you guys informed accordingly. So wait for the next candle. If you have a bullish engulfer above 50 EMA, anywhere above 50 EMA, that would be your entry, and this is an area from where you want to exit and look for the sell conditions. Now here on Owanda, exactly same, bullish engulfer will be your buy signal, and then we have a zone above 2.317 that goes up to 2.474, from where we're going to look for our sell condition, which I've already mentioned on capital.com and data. So keep an eye. Once we have these conditions, only then I'm going to look for our trades. Now remember, one more thing I'm still considering. Now we have these zones on my chart. I still have these zones on my chart in case of dramatic push down. I've already mentioned these zones in my previous video. Feel free to check that out and have these zones on your charts as well. If we have that, we can get a good push down and a continuation towards the upside. A very good example of that I've just shown you, which is Euro Japanese yen. If you've seen here, the price broke above, pull back down, and then push back up. So that is why it's worth having these zones on your charts here for natural gas as well, which I mentioned in my previous video on all three platforms. Here on NEMEX, we are close to the zone, which is 2.359 that goes to 2.481, from where we're going to look for our sell trade with bearish engulfers, double top inverted hammers, 382 candles bearish is my entry condition. Otherwise, above 50 EMA, only pullback entry, and if you have a dramatic fall, this is an area from where we can expect another push up. Have these zones on your charts already, this zone and the zone below as well. Next, we have gold, nicely pushed up, breakout from the symmetrical triangle pattern. I've clearly mentioned that once we have a good bullish momentum, that will be your entry as well. Stop loss can be below this pattern and take profit. Hit nicely, broken above this symmetrical triangle pattern right here with this candle. That is your entry already. Stop loss can be below this pattern, take profit. You can go 1-to-1 initially, and we can still get a possible push up aggressively if you have entered at the break. Now if you entered here, stop loss is below this pattern, below this swing low. In that case, you easily made $23 by going 1-to-1. Risk to reward ratio, nice and winning trade here on gold. So at this point, what to expect? At this point now, we are heading towards a level of anchor. We have no resistance, no major resistance, but this can become a good resistance because we already got 1, 2, 3 touches at triple top previously. So that can again push the price lower. Now ignoring that wicks, I will do something like this to keep it as simple as possible. 2396 that goes to 2418. Now we can get and expect a possible push up to this level, from where we can expect a nice fall with bearish engulfers or double top entry condition. Let's do it red as it's my resistance now. Otherwise, for now, until we hit this zone, we are only looking for buy trades with a pullback that can hit 20 EMA or 50 EMA, then it can form a bullish engulfer. In that case, we're gonna go long again. For less aggressive entry of the symmetrical triangle, if we hit this triangle pattern and price form a bullish engulfer, that is also a valid condition to go long using 1 ATR targets initially, or keep your stop loss below these EMAs. So that's what I'm looking at gold. expecting a good push up, but expect some pullback above 50 EMA. If you don't get a pullback and this price hit the zone above, then start to look for the bearish engulfers or double top inverted hammers, 3 or 2 candles bearish from this area above in red. Right here on silver, I've just readjusted the zones. Now it hit a level of resistance and forms a bearish engulfing candle. Right here, if you look back, it is a good level from where the price reacted nicely in the past. And now we have a possible chance that we can get a good push down from here, at least till 50 EMA. We are pushing down and we have a likely chance we can push down to 50 EMA, from where we will look for a next condition like bullish engulfing pattern to go for another long trade. So wait for that. Now I'm expecting some good pullback out of silver from this area where the price is currently inside of, which is right here. And next buy trade will be only if we are broken above this area, and then for the possible pullback we're going to go long against. For now, only looking for buy trades if we have a good pullback to 50 EMA followed by bullish engulfer, and keep on taking long. For the short term, I'm now expecting a good pullback to 50 EMA or 20 EMA, as well as we already got a nice bearish engulfing, swing high bearish engulfing pattern. That is also one of my entry conditions. Now I still remember that my next major zone is right above, from where we can expect some good reversal. This is just a good resistance from where we can expect some pullbacks before the price will likely head higher. So wait for that. Once we are broken above this high, only then we're going to start to look for the next bullish trades. Next we have crude oil. We are still in the level of support, which is right here, and I'm still waiting for the price to break out above this zone. Now coming back on 4-hour time frame. As long as we are above this zone, we are not taking sell trades. Now we can expect a possible double bottom pattern right here. I know that's a little bit below the zone, but using some discretion, as we already got one bottom and we are also inside the zone on a daily time frame. That is why I'm using this discretion. In case you are wondering, we already have a nice push down, formation of first bottom, pullback, keeping my stop loss below this pattern. I know the crude oil has given some nice signals, but that did not work out, but it's still inside the zone from where we can expect some good push ups. For next sell trades, I only want to see a break below this low and then a pullback, and then you're going to use this possible zone as my selling zone or my next pullback entries bearish. For now, wait and see how the price reacts from this zone, and if you have a condition, we're going to go long from here. And the next buy pullback entry will be only if we are broken above 50 EMA dramatically, and then we start to look for the pullback and keep on taking longs, which I'm going to update you guys accordingly in my next video. Last one, we have US cocoa. As promised, now price is pushing down, and as you can see, it was in a very big and nice uptrend from quite a while, and now it's starting to reverse. Why I'm saying it's reversing? Because as long as price is making higher highs, not breaking below the previous lows, buyers are still interested to push the price higher. As you can see, we did not break below this low, but after the pullback, buyers pushed the price up and we had another high. Now I want to see a break below this low right here, which did not happen. Now price pull back and then break above a new high. Now at this point, for the trend to continue, I wanted to see either after the pullback without a price to break below this low. After this pullback, I want to see another shoot up. That is a signal of the trend continuation, which we did not get. But instead, we had a break below this low. That is a possible signal of reversal. At this point, we broke below this low, and now we are getting a pullback again to this anchor level that was broken. Now we have a likely chance 9046 that goes to 9659. Our likely chance, as this level acted as a resistance support twice. So that is what I'm expecting, a hit of this zone and then a possible push back down and continue to push down in a trend after hitting the zone. Otherwise, we have 50 EMA here. If the price hit 50 EMA, forms a bearish candle, that is also a sell signal, and price will likely push down. So not looking for buy trades, only looking for sell trades, and we have a likely chance from this anchor level price will fall again and possibly fall below this low, and now will head lower in a new down trend. And I will only looking for buy trades. Let's say if you have a dramatic push up above 50 EMA, then I will start to look for my buying opportunity. Otherwise, we are broken below the low and now expect some more push down after the retest of these levels. So bearish for US cocoa, not looking for any buy trades unless we see a condition. So that's it for commodities, guys. Hope you're getting a value. If yes, hit a like button for me, subscribe if you're new, and join Money Markers family. Hope you trade green and have an awesome weekend. See you guys in the next video. Take care.